The purpose of this video is to just go through kind of the 4 main pros of a loan modification and the 3 main cons of a loan modification. These are conversations I have frequently with borrowers who are kind of looking at their situation as a whole, trying to determine what option is best for them to pursue. So a loan modification can be a benefit because it obviously resolves the default on the account. If you can get approved and fully execute a loan modification with your bank, that will just allow you to resume making regular payments, and the lender will be able to mark you current in their system. They will remove a default status from your account. They won't add any more late fees because you won't be missing payments anymore. And so if you're a borrower who's in one of those very stressful situations where you know you're behind on your mortgage, if you can get approved and get back on a loan modification and afford those new payments, the default status on your account will be resolved and everything will kind of move forward with you showing current on your mortgage. Secondly, the foreclosure activity also gets resolved. So if you are a borrower who's kind of already to this point where your loan is in foreclosure or you're facing foreclosure activity, and you're able to get a fully executed modification agreement, the foreclosure activity on the account will also go away as you'll be marked current, and again, you'll be making payments, and it is a way to resolve foreclosure activity. There's a side note there, which is the review process in and of itself may be able to hold off some foreclosure activity if you can do very specific things. So in a particular situation, if you can get a loan modification package deemed complete and in review with underwriting, and there are other videos about what that means, but if you can get a complete package in review with enough time before an actual foreclosure auction date, many servicers will agree to put a hold on the foreclosure activity while they review that package for 30 days. Now, don't rely on just this information to be enough. You have to get the package complete, which can be difficult. You have to get the lender to confirm that they've placed a hold on the foreclosure activity, but there are guidelines out there that say if you're able to get your package deemed complete and there's more than 37 days before this auction date, the lender should be able to place all foreclosure activity on hold for 30 days while they review this package. Sometimes they don't do it, and sometimes you do need assistance in getting them to place that hold. So I don't want to put too much emphasis on that because I want to make sure anyone listening to this gets the help that they need to make sure that that hold happens so they don't end up with a foreclosure auction date around the corner if they weren't expecting one. But that is a guideline that gets enforced by the bigger servicers, and so it can be a benefit of applying for a loan modification. Another smaller benefit is sometimes you end up with better terms at the end of a loan modification. This isn't always the case, but sometimes your interest rate will drop a little bit. Some lenders are required with a modification to set the interest rate at the market rate. So if the market interest rate has dropped, it is possible for a borrower to get a modification with a better interest rate. Every once in a while, a lender will forgive a little bit of the principal. So it's possible your principal balance might go down, and it's possible that your monthly payment might drop. Now, none of these drops are very significant. Loan modifications do not provide ways to get significant drops in payments. The most really you can expect is maybe a $200 to $300 drop, but that can be a benefit because it can get a little bit more affordable for you if you go through the modification process. Not always, but sometimes. Okay, moving to the cons of a loan modification. So loan modifications aren't good options for people who have a permanent financial hardship. They don't solve permanent financial hardship, right? Loan modifications are good options for people who've had a temporary setback. That setback has been resolved and they're financially capable of moving forward and making the payments. So if that describes you, meaning if you have this temporary hardship and you're comfortable now and the mortgage payments work for you, a loan modification is a good option. But a con would be if you're somebody who's lost a significant chunk of income and there's no foreseeable way to get that income back, a loan modification is not going to be a super great option for you because they'll probably give you a payment close to your original payment. And if that payment is unaffordable, you're probably going to be in a situation where you'll re-default again, which is not good. So a loan modification is not a good option if you have had a huge change in financial circumstances and you're at risk of defaulting again, even if you were to get approved. So if you're somebody who's had more of a permanent financial hardship, you might want to look at other options away from a loan modification. Another con of a loan modification is that you end up paying more to the lender over time. And so this bothers some borrowers, which is completely understandable. You know, if they modify the loan, they're essentially going to extend the term of the loan, they're going to add the amount that you missed on the loan, and you're going to keep paying interest on everything. And so loan modifications, you know, are beneficial for the banks at times because they get to collect more money over time. But if that's not something that you're interested in as a borrower, that can be perceived as kind of a downside of a loan modification. And I would say the third con that I speak most frequently with borrowers about is just the loan modification application process. It's a huge drag. It's very complicated. It's different between the lenders. It's hard to get an update on what's going on. It's hard to complete the packages. Every investor, every lender handles the process a little bit differently. Every application is different. And so I just hear from borrowers that going at the process alone can be a con in and of itself. It takes a long time. You know, you have to have a lot of time to kind of call and follow up with the lenders. So if you're a borrower currently experiencing that type of con where it's just like not going well and you don't feel like you know where your file's at, it might be time to reach out to an attorney or an advocate in your state to see if you can get some help on the process.